What is good, YouTube? It's your boy Sean, known online as Sensei Trades, back again for another episode of TikTok. Now, this video is going to be just my reflection on my 7 years of trading after making millions of dollars in these markets and having to lose thousands in the process before doing that. And what I can tell you is, when it comes down to it, it's all about the experience, right? Some people can get this in a year, some can get it down in 6 months. Some people, it takes almost 10 years before they actually get profitable enough to see true success in this game, right? But the process is, it all comes down to you. This is a you versus you game. It doesn't matter how many YouTubers you subscribe to. It doesn't matter how many videos you watch. If you're not hitting those charts, if you are not putting the grind in, if you are not putting in the effort, the dedication, the drive you need in order to see success in this game, you're never going to see it. See, up until the point when I was younger, starting out, there was no plan B. It was either trade or die for me. There was no quitting, right? I could take a break, but there was no quitting. I wasn't moving on to nothing else. And even to this day, while I may be doing other things in addition to my life, I'm still going to be trading. I still have end goals when it comes to trading. I want to eventually launch my own hedge fund, not a prop firm, a hedge fund, right? Where we win with every profitable trader. And I just remember the days where I dreamed to even get to the point to even talk like this. And the first thing you really need is a big enough dream, right? I understand that some people get up here and talk about how much money they made just to end the video with, oh, click the link in the description below to buy my course, buy this $5,000 mentorship. I get it. I was there. I was in your shoes before. This didn't come overnight. I say this in majority of my videos. It took me 2 years to get profitable. It took me another 2, roughly, to see my first 6 figures. And it took another 3 after that to see 7. Again, it doesn't come overnight. I had to lose so much money before I saw the fruits of my labor, before everything that I dreamed of as far as trading manifested itself. And that didn't come from a strategy, right? It didn't come from knowing how to chart good. It didn't just come from understanding technical analysis, right? It came with experience. It came with understanding that when it comes to this game, when it comes to every single trade you take, there is nuance and context that needs to go into it. While you may have a set system, which you still need to have, it all comes down to your own discretion at the end of the day, because you're a manual trader. You come to the charts, you analyze the charts, you decide whether you're going to buy or sell, and then when your strategy criteria is met, you click the button. However, there's going to be plenty of times where you do all of that, but for some reason, something in your gut is telling you to not click the button. Something is telling you, this isn't looking good. I'm gonna stay back on this one, or I'm not gonna put a lot of risk on this one. And then lo and behold, that is what just saved you. And that comes with experience. You're not going to get that by just learning a strategy. Trading is one big gray area. This is why, no matter what I say, even my most viewed videos so far, when I talk about how I made 320,000, I talked about how support resistance is outdated. But there's still people out here, there's still legends in the game that we consider legends that still trade support and resistance. They still use oscillators, moving averages, Bollinger Bands, all this stuff. They still use all this stuff, and they're still more profitable than anybody up here on YouTube. And there's a reason for that. It's not just because of the strategy itself. It's because they put the time in behind that strategy. It's because they spent day after day backtesting, collecting data, refining it, adding things, removing things. And then eventually they got all the pieces together and they found their edge. They found their predictive edge in whatever they're doing, right? There's a YouTuber out here, not gonna name drop, they need to pay me for that kind of promotion, that just recently got a $2 million payout from Apex, right? And even he tells you, all he did was find the things that worked for him and just refined them for the future. And then after he did that, or while he did that, better to say, he mastered his risk management. And that's the part that some of y'all always love to forget about. It's not about your strategy. Your strategy is only as useful as your ability to manage risk. And I'll do you one better. Your strategy is there to structure your risk around. This is why every time somebody says, oh, you need to wait for the liquidity sweep and then the tap back into the order block, or you need to wait for structure to break and then retest, it's all to help you manage your risk, right? Because there's no point in talking all that crap, right? Talking about how, oh, this strategy is outdated. You need to watch this guy. You need to watch this girl, all this and that. And you still blow your account with every loss that you take. Majority of your trading is going to consist of small wins break evens, and small losses. And then every so often, you're going to get that win. Every so often after that, you're going to get that win that ends up being a runner that's just 5-10x what you normally look to catch. It happens, but just not every day. Your primary focus, and peep how I never said this just now, your primary focus needs to be centered around avoiding huge losses. A predictive edge shows itself when you are able to keep your losses smaller than your wins. As long as you end the trading period, however long you may call that, right? Could be for the year, the month, or the week. You have an edge. You have a profitable system. But that all comes down to the structure of your approach and your risk management. And when I mean approach, I'm not talking about just charting. You need the fundamentals, both news-wise and approach-wise. If you don't have any idea of how you're going to approach the markets besides some strategy, right, you're not going to see profitability. You can buy every course on this planet and follow that guru to the T and still see no profitability. I'm trying to tell you, I could really be a rapper out here. But because it's my birthday tomorrow, I normally like to gift my people something on the flip side. Ironic, ain't it? My birthday, but y'all are getting a gift. But I just wanted to tailor something to my beginners out there who need that structure, who needs a place to start, right? Even intermediate traders who have somewhat of an idea of what they're doing, but they just need a little bit more direction. And this is completely for free, right? This is one of the few times I'm gonna tell you to click the link in my description, but don't worry, it is 100% free. Matter of fact, before I even show you this, let me talk about that for a second, right? I get it, y'all. I understand. I know that y'all are sick and tired of watching somebody just for them to be like, oh, click the link in my description below to pay for something that I'm offering. This goes into my point where I say that not a single trader only lives off of trading. If they say that, they are lying to you. I don't think y'all understand just how much mental stress that will put on you for trading to be your only source of income. You have nothing else to fall back on. That can be stressful. It only takes one losing streak. It only takes one bad trade and you're broke, right? I don't know if y'all remember The Dark Knight Rises, but the first thing that Bane did to cripple Bruce Wayne was he broke into the stock market and he just placed a few bad trades under the Wayne Enterprises stock. And in less than a day, it only took a day, and Bruce Wayne went from this multi-billionaire to nothing. They only let him keep his house because his parents owned it. In less than one day and a few bad trades, you can go from hero to zero. Why do you think they're selling you stuff on the back end? Because they know this too. Not a single trader only makes money trading. They always have other sources of income, whether that is becoming an entrepreneur and having multiple businesses, whether that's still, like myself, go to work, get that extra paycheck in. Because it's easier on the mental to trade knowing that you have a fallback plan, right? So stop believing these people if they say, oh, you just need to learn how to trade and you can live like me. Yeah, you need to learn how to trade, diversify your money, and then know how to increase it in order to live that extravagant lifestyle. Do you really think that a trader is going to make $1 million and then blow it and then blow $200,000, $300,000 on that on a Rolls Royce? Think, Mark. You feel me? So do not feel bad for working your job and still being a trader. You can run up $1 million today and not quit your job. And the only people who will look at you crazy are the ones that aren't profitable. Keep that in mind. The people who have to try too hard to make it seem like they're a trader, they're not profitable. The only time you need to look like a trader is if you're on Wall Street, if you work for some trading company that requires you to look professional. But more often than not, the richest guys are in their crib just like this with a regular t-shirt on, right, and a do-rag. Rich does not have a look. Success does not have a specific look. Success is a status that you reach. So don't feel bad for working your job and being a trader, because most of y'all are going to make that money, realize what I'm talking about is right, and still work your job. Or, like I said, you're going to quit your job and then start to build other sources of income just so you have a fallback. You need to have a fallback. Y'all need to watch and listen to my backstory, because that's the only reason I went broke the first time. I didn't have safety nets in place. I didn't have nothing to secure my money. I just had all my money right here in one big old pile, thinking that it can't be touched. And all it took was one person to throw a match on the pile and all of it was gone. So take your time, run your race. You are the only person you are competing with is yourself. Don't compare yourself to me, right? Don't compare yourself to anybody else unless it's for motivational purposes. If it's, dang, I want to get to his status, I want to get to her level. But don't think that it is what it isn't, right? Every trader has more than just one source of income. But back onto the original thing, let me give y'all my gift, and that is my trading starter kit. Now, this has, let me get over here. This has basically the framework that you need to get started with trading. Maybe there's some things in here that you didn't know about, but this is what you get on the open, right? You get you a little welcome message, and then you got your table of contents. Now, I absolutely forgot to add the glossary to the end of this. So in the future, I'm going to let y'all know, of course, I'm going to re-upload this with the glossary so you can download that new one. But you get, I lay out the framework for you. You got a syllabus. Welcome back to class, students. You get you a syllabus. You got your objective. I cover the topics, or I talk about the topics that we're going to cover, the materials that you need, what you need to expect. And keep in mind of that last one, take ownership of your growth. If you blow your account, it's not because of your mentor. It's not because the markets did you dirty. It's not because the orange man put in tariffs and now the markets is uncertain. It's you. All of that stuff means that you need to have the ability to adjust to it. But now you also get the different kinds of markets: Forex, futures, stocks, crypto, and options. You also have metals and commodities. Did you know you could trade corn? You could trade orange juice. I'm being so serious. You could trade soybeans, coffee beans. You could trade everything at this point. But then you have trading mindset and psychology, discipline over emotion, right? Consistency beats accuracy. Stick to your plan regardless of market noise. Common emotional traps: greed, fear, and revenge trading. The two things that will kill you as a trader is fear and greed. Fear will keep you out of the markets, and greed will keep you in them too long. You need to find that mental balance, because we want to be traders and not gamblers. Gamblers press the button with no rules, with no structure. You, in all honesty, if you rather be a gambler, don't even trade. Take your behind to a casino and play slots. You honestly have a better chance of being profitable playing slots than being a day trader if you call yourself being a gambler. And trust me, that line is fine. Bars. Again, all you need is just one misstep and you go from a trader to a gambler. Traders manage risk, something that gamblers can't do, in a way, right? The only thing they have in common is that you go into it, you should go into it understanding how much you are willing to lose. If I go into the casino with $1,000, I want to only lose that $1,000. Or maybe if I go in with $10,000 and I only want to lose $1,000. Over leveraging at that point, comparing the two, is I lost that $1,000, but then we go back to this, right? I get emotional, I get pissed off because I've been getting my butt kicked in blackjack, and I'm like, nah, I could put another 1,000. I got 10. Well, I got 9,000 left. I could put another 1,000. Don't do it. Walk away. Remain detached. Don't fall in love with a position. Don't fall in love with the game. Follow your plan and not your feelings. All right? Having a growth mindset. Mistakes are data as well. I say this in my group. With every loss should come evolution. With every loss, you should be reviewing. Why did I lose? How did I lose? How can I avoid losing like this again? Right? In this mini series I'm doing, Past This Challenge, I lost a trade simply because I made one little error. Right? Mistakes are data. But then you now have your trading sessions. You got the Sydney session, obviously all in Eastern time. If you somehow couldn't read that, I don't know what to tell you. You probably don't need to be trading in the first place. But you got your Sydney session, your Tokyo Asian session, London session, and New York session. And there's a key overlap that we want to pay attention to. That's the London, New York overlap from 8 a.m. to noon. Peak liquidity, right? So if you trade US-based pairs, that is US and London-based pairs. That typically is the best time to see movement within your trades. Now, some tips. You want to match the strategy to the session's volatility. Be mindful of news events. Always check news before you trade. ForexFactory.com, GoMoon AI, MyFX, just something that tells you economic news as a trader. And avoiding low volume hours unless you're scalping or you are a range trader and you have a range-based strategy. But then, of course, you have your 4 different trading styles. Not going to go over those. I went over those before in one of my earlier videos, one of my first videos, actually. But really, what style fits you? You need to consider your personality, your risk tolerance, and your lifestyle. If you prefer faster kind of trading, you probably are a scalper or a day trader. But if you want to slow things down, take a more measured approach, like it says here, go either swing or position trading. Though for Forex, you're probably going to be a swing trader at most. There's some position traders out there, but I know for the most of us, we're not trying to wait weeks and months to make our money, right? But then on the right, you have what is Forex? A global market for trading currency pairs. Not going to go over all of that. You're going to have to read that yourself. But then I also have futures explained in detail, which are standardized contracts to buy or sell an asset at a future date and price. So for example, if I am Apple and you are the consumer, you are the buyer, you come to me and you're like, yo, Sean, I want to have a contract with you to buy to buy iPhones at $1,000, regardless of the price fluctuation. I, as Apple, go, okay, cool. Here's our contract. You are now locked in at $1,000 of price, my $1,000 iPhone price. So now a few days down the line, I increase the prices of my iPhones to $1,200. You then just made a profit of $200 on top of multiplied by how many contracts we just made together. So if you put in 10 contracts at $1,000 and then I raise the price $200, you just made $2,000. Simple as that. But why trade futures? The number one thing why? The entire market is regulated, just like stocks. So if you want a secure market to trade in, if you want a market where you know that every single broker is regulated, your money is protected, it's nice and safe, trade futures. Forex has regulated markets, but they don't provide high leverage because they actually care about your trading career. For example, Forex.com, Awanda, IG Markets, Think Capital, right? Or Think Markets, I should say. These are regulated brokers in the Forex markets, but then you have unregulated brokers. Not going to name them because y'all need to go watch my other video. But futures is your safest bet, while Forex is your most volatile bet. Even though after a while you'll realize futures can be just as volatile, if not more volatile, than Forex. But I'll leave that up for y'all to decide. But then you have your risk management, probably the most important part of this entire ebook, I should say, because that is what will help you build that long-term consistency. You want to focus on your risk per trade, your risk to reward, and your position sizing and some equations. To figure out your risk, you want to take your account size and then multiply that by the percent that you are looking to put up. For your lot size, you're going to take your risk in dollars, and then you're going to PEMDAS. That's what y'all remember PEMDAS. So your stop loss in pips times the pip value divided by your risk in dollars. So then for your reward, your risk in dollars times your risk to reward. Then you have an example right here. So if you took $10,000 with a 25 pip stop loss with a pip value of $1, you would get a 0.2 lot size, multiply that by your account, and you have $200 you can risk. So now your lot size, say you had 25 pips, like it says here, you have a 25 pip stop loss, multiply that by the dollar pip value, and then you get 0.08 lots. Always, always, always define your risk before entering a trade. And if the setup doesn't offer at least a 2-to-1 risk to reward, consider passing it. Now, this one, again, goes back to the nuance that is required. Some trades is probably better to just take the 1-to-1. My recommendation is that the moment you hit your 1-to-1, make your decision there. Either reduce your risk to break even or just take your profits. Have the next unit of risk to make that 1-to-2, have that be your runner. And then if the trade just keeps going beyond that, just secure it with each unit of risk that you gain. But then we have market structure. You got regular uptrends and downtrends, higher highs, lower lows, and then we have supply and demand. At the end of the day, no matter what you call it, it is all some kind of support and resistance. You're going to wait for price to make a high, pull back into a box, and you're going to click buy. Or it's going to break a low, it's going to pull back into a box, and then you're going to click sell. But now the structure that you need a trading plan. What is the key components of this trading plan? Your goals, your rules. How are you going to manage your risk? What markets are you going to focus on? How are you going to journal and review your schedule and your plan? Right? It should be clear, simple, and personal. You don't need 20-something pages, right? There's software out there that you can connect your trading account to, and it journals for you. So you just need to do your own research with that. I'm not going to give you all the tips and tricks because you still need to put in the effort for yourself. But I am going to give you a template. No excuses. I just gave you a template right there. It's in the ebook. Now you can't directly type into it, which I am working on fixing, but I'm not that experienced with all that yet. You know what I'm saying? Y'all understand. But then you have your trading Journal, what I was just talking about. And now you have a template for that as well. And then I also give you a visual guide on what I mean by support and resistance, or not market structure, excuse me, and supply and demand. And now here is the classic way to do it, where it's the last candle before a huge push of liquidity. But then I break down prop firms. What are prop firms? And there's the explanations there. But then here's the real, some of y'all really need this. I give you the management breakdown of each prop account up to 300,000. So as y'all see, for 50Ks, you should only be risking that much each trade. Now, the max daily drawdowns, that's just my personal opinion on how to properly manage the account. Most prop firms, they have daily drawdowns. I know Top Step, they have daily drawdowns that you need to pay attention to. So it's just a good outline to keep yourself disciplined and some rules to follow. But then I break down how to properly manage prop firms. Don't fall for the you can pass it in 1 day, pass it in 2, 3 days. Pass it whenever you can pass it. Take your time. Quality over quantity. Watch my series. You will see I actively change my mind when it comes to trades. I'll set a pending order, but then I may not like how it built up to it, so I'll just cancel the pending order. And I bet you that's going to save me some losses. I bet you, right? But everything that you have learned throughout this ebook will go into your ability to manage prop firms. And I'm going to end it with this, a motivational letter to y'all that you can read every day if you want to. This is the first step of your trading journey. This is what you was made to do. You are capable of doing this. You have the ability. If I can do it, you can do it. I graduated high school with like a 3.2 GPA. I am literally a C student. Yet I have made more money than some of the 4 point GPA students that graduated alongside me. You don't need this is gonna sound crazy, but it's true. You don't need to be smart to be successful. You just need to have just an inch of common sense and give enough of a damn to secure your future, to take your future serious, make the sacrifices you need to make in order to get to the life you want to, the position in life you want to be at, and then have your fun from there. Don't get me wrong, still have your fun during the process, right? But you need to put your head down and grind. That is the only way you'll make it in this life. You got this, man. Until next time, peace.